we would be getting $91,000 in annual income in dividends, which would just be insane. Hey, what's going on, YouTube? So today I'm going to be showcasing you my investing portfolio, which is all about long-term investing. So if you are somebody who loves long-term investing, hopefully you guys enjoy this video with me. Now, we're going to hop here on screen so you can follow along step by step on what we're looking at, how we're kind of perceiving this investing portfolio, and how things kind of sometimes change, and maybe some things, are going to look a little different in the long term. So what my main goal with this investing portfolio, for a lot of people is, that golden number of $1,000 per month. We hear about it all the time from a lot of dividend investors or just investors in general. And that's a great number to go with, because who doesn't want $1,000 a month, right? Like, doing essentially nothing. Like, obviously we're sitting here, learning about it and actually implementing it. But overall, making this money that we get from dividends, it's no big deal. It's just sitting there earning us this money for doing absolutely nothing for the most part. So let's talk about this. So right now you can see my dividend portfolio is sitting at $38,670. And I say dividend portfolio, even though you're going to find out that I don't have a lot of, dividends paying out on my portfolio right now. And there's certain reasons for it. And I might be foolish in this path, but you guys can follow along and, let me know in a couple of years if I'm completely wrong or if I made the right decision, because we're only going to know by time. So essentially what we're trying to do here is, in this portfolio that we have right now, I am trying to have this money available for me in about 14 to maybe 15 years. I keep saying 15, but a year's passed since we talked about this. And what I'm trying to do is have this money available for me in that time period around, for me, I'll be about 45, 46 years old. And I want that to be able to be spent on travel and things that are a little bit more out of the realm of normal spending. And the reason for that is because we already have a retirement account all set in stone, so we don't have to worry about retirement. We're going to be golden on that. I've been investing in my retirement account since I was 20 years old, and then my wife had her retirement account as well too. And those things are just running smooth. They're in S&P 500s. They're gold, right? They're sitting on the path for success. And so I wanted to have something else before that, because for us, we're not going to be retiring for another 26 and a half years, I think, for myself. And then my wife would be 27 and a half years for her. So we got a long time till we hit retirement and can pull that money out of 401k. So I'm like, okay, well, I want to do really cool stuff, in my 40s and actually enjoy some of the money that we're building up towards. So how do we do that? How do we get to over $1,000 a month, which is what a lot of people want as a goal? But I want more than $1,000 a month. $1,000 is one number, but I want more than that, right? So let's kind of go over some of this stuff. So like I said, you can see our portfolio is sitting at $38,670. And, it's not too bad. You can see here, it's in our all-time right now. So we've gained a total of $5,809 in this portfolio. This is including things that I've sold in the past for profit or loss. And then this also includes our total earned dividends, which you can see right over here is $426. Now, that is all earned, which means some of it has not deposited into my account yet, because we might have hit the ex-dividend date, but not the payout date. If that doesn't sound too, familiar to you, maybe I'll break that down here in a little bit if I remember to. But effectively, this is what our goals are, right? Trying to build up some wealth by getting some nice gains and also earning some nice dividends in the long run. Now, this is what my portfolio looks like. I have a bunch of slices in here. I got something like growth, I got tech, retail, industries and energy combined, financials and real estate. Obviously, some of this is not real from the regular market. I just put it together. And then you can see here how each one is kind of doing in its overall. Obviously, some are doing better than others, but that's kind of the way the market always tends to work. Some are up, some are down anyways. In case you're kind of curious on what platform I'm using, if you're not too familiar, this is M1 Finance. Is absolutely my favorite investing app out there in comparison to any of the other ones. I will have a link for it in the show notes down below for you. Two things. One, that does help support out the channel financially, but you get free content just like this, so I do appreciate it. But it really gets you started with investing into the stock market, which is a big deal, because this is what I show people all the time. Let me show you right over here. Look at this. So January 29th or January 23rd, I think is when it started, 2019. I put in $100, right? I put in $100 and I slowly worked my way up until I started feeling more comfortable. So if you don't feel comfortable getting started with investing, just know that $100 will get you in the door, and then you can start working your way up. And if you really feel uncomfortable, I'll have a bunch of tutorials that you can learn from with setting this account up all proper and getting everything running smoothly down below. It's entirely free, doesn't cost you a single thing. Now, as we move on from that, the things that I want to kind of talk about and showcase here are a few different things. One, let's go into my holdings. You can see here we have 21 holdings. So if you've been following for any amount of time here on the channel, you know that this is actually a brand new number, because we were sitting at 23 just a couple days ago, or a couple videos ago, I should say. So I ended up selling some stocks, and there's obviously certain reasons for it, and maybe I'll break that down here in the future. But we're down to 21. If you have more than this or you have less than this, there's no right or wrong answer. It's whatever fits your investing style. Obviously, for us, trying to get to $1,000 plus a month in dividends, or even more than that, is going to be all focused on the long-term play here, like what we're actually trying to accomplish. And so if you go through this list and you kind of see, you can pause the video if you need to, making sure everything is on the screen here. Some of these companies, one, either don't pay a dividend, like Tesla or Google or Airbnb. None of these companies pay dividends. And then some of the other companies like Apple and Microsoft, and some of these other companies like Ross and Lockheed Martin does pay a good one, or Costco. These companies don't pay a really high dividend. If anything, they actually pay a fairly low dividend, something pretty abysmal in the dividend investing community, because most of them like to talk about the 4% rule, which is having a company that pays out, 3.5 to 4% on their dividends. Well, let's go into my research tab here for M1 Finance, and I'm going to click on my actual portfolio. So these numbers, for some reason, are just kind of backwards right now, so they're not really working. But what this actually shows is my current dividend yield based off of the percentages I have for my stocks and what they actually are giving out in dividends. So my dividend yield for a dividend portfolio is 1.034%. Pretty abysmal. Again, when we're talking about trying to build up a dividend portfolio, because some people might be thinking, well, how am I going to get to $1,000 a month if my dividend yield is 1%? You're going to need so much freaking money in this account to get to, $1,000 a month. Like that's a lot of money that's going to be needed. But there's a couple different caveats to this that most people don't want to talk about, or don't talk about, I should say, in general. And then that's dividend increases. That's companies that are increasing their dividends at a really high percentage year over year. Now, some of these 4% dividend yield companies that are paying out that 4% now usually have a pretty low increase year over year. Let's jump over to seekingalpha.com. This is the site I like to use. I'm not endorsed by them or anything, but we'll just go ahead and go on here and show you guys. So let's actually go to one of the most popular dividend investing stocks. So this is Realty Income. A lot of people know this, ticker number O. And when you come in here and you go to their dividend scorecard, you can see, so their dividend yield is 4.23%. That is pretty good. You're getting 4% on your money, well, a little over 4% on your money right now. And that's a great thing if you need that dividend income today. If I was needing that money today, I'd probably invest it into this company, which I had the company before, but what I started realizing was over time, the downside with a company that is already giving out 4% is that they aren't increasing their dividend yield at the same rate as some of these other companies. So you can see here their 5-year growth rate on average was 3.86%. Now it's been a little lower because of all the craziness that's happened in the markets over the last couple of years. So I think their average is a little over 2.5%, which is, well, I would say keeping up with inflation, but inflation has kind of, gone off the edge a little bit here recently, but that is, pretty low increase year over year versus if we go in here, let's see, I got companies like Apple, for example, trying to get me to buy stuff here. So let's go click on their dividends here, and you can see here, so their dividend is 0.67%, very low, and that's actually my highest position in my portfolio. If we actually go back over here, you could see Apple is my number one position based off of value. And you can look over here, but their 5-year growth rate is 9.41%. That's pretty awesome. And I'm going to give you an example of this and how this actually all works out. So we're going to go to a dividend yield. And the way this works is when companies are increasing their dividend year over year, you're essentially making more money for already holding the stock that you have and getting paid out more for each dividend or each share that you have. So here's an example. We're going to go in the last 5 years. This chart works backwards. So today we said it was 0.67. So if you invested 5 years ago, and let's say you put in $10,000, you didn't invest any more in, you obviously got some really good value in growth from Apple, but check out what your dividend yield would be, give or take about 3.69%. That's what you would be making today in dividend income as far as a yield on cost because of the increases that they were having over those couple of years. So that's pretty significant. If we go back to O, let's see if we can go back to O really quick. Perfect, brought us on that same screen. So 5 years, again, if we invested today, it's 4.23%, which is, great. Check this out. 5 years ago, if you invested that same, let's say you invested $10,000, you'd be getting a 4.41% yield on cost. That's not a big difference. If anything, that's not even a difference at all almost. It's 0.2% difference. Now, obviously, you're increasing your money and everything else. And depending on, the cost of the stock back then, that'll have a factor into it as well. But if you pay attention to these things, you would think that in 5 years that you'd be getting more than 4% if you had bought it 5 years ago. So somebody who bought it 5 years ago and somebody who's buying it today are both getting that 4% dividend yield based off of the yield on costs. So when I look at these things and I try to determine okay, well, in my portfolio, I have a ton of Apple, and yes, I'm not getting the biggest dividend yields on these, but if they keep increasing it, I'm going to have a better yield on costs. And I'll show you here. This is with my portfolio here. This is something really cool. So you can see up here at the top, it tells me what my dividend yield is. I haven't updated this. You can see it's the numbers are a little off, I think, right? 386. Yeah. So it's definitely hasn't changed yet. So I think this still houses the 2 stocks that I sold recently. And so the way this works is this is my current dividend yield, or would have been if I hadn't sold those 2 stocks, because those ones actually had some high yields. But this is my yield on cost. This is effectively telling me that this is how much I'm getting out of the money that I put in. So with Apple, their dividend yield is 0.67. My yield, because of when I put in the money and when they increased the stock price or the dividend increases, my yield on cost is actually 0.77. So that's 0.1% more than what people are getting today if they invested. And if I didn't buy any more Apple shares, and over the next 5 years they keep increasing their dividend, my yield on cost is going to continue to move forward and up. And you can see this happen again with a bunch of other companies. And here's a really cool example. So Ally Bank, I have this one. I bought a lot when the market was really low for financial apps, or financial stocks, I should say. So you can see its current yield is only 1.54. My yield on cost, because I bought it at such a lower price point, is 2.28%. So I'm definitely getting a lot more in the dividend than they are getting now if somebody bought in today. So that's a really cool feature that I personally love that a lot of people don't look at. So when I'm sitting here looking at my dividend yield being, around 1.5%, I'm not worried about it because I don't want to pay those dividends today anyways. Because when I get paid my dividends, if I go in my activities here and look at all my dividends, so I got paid from Home Depot, from NextEra Energy, Microsoft, Johnson & Johnson, Visa, all these companies. I have to pay taxes on these dividends, even if I just reinvest them, because this is a taxable account. And so I had to take that into consideration. Well, if I'm getting paid lower dividends today, but then having them increase over time, sure, I'm going to have to pay the taxes as that, money increases, but it's not the 4% today. It's not, the 5%, that some people are getting or whatever. Obviously, there are some downsides, right? Getting lower dividend yields means that I'm not going to have as much money to reinvest, because if you're making 4% on your investment today, you can reinvest that money right away and help it grow faster. So there's that play as well too. But I think for me, based off of what I'm trying to accomplish in the next 15 years is an idea that, some of these companies that maybe aren't paying dividends, like Facebook right now isn't paying a dividend, but if it did in the next 5 to 10 years, I get in at a much better price point and I get a much better yield than somebody buying in at the day that they announce that they're just sending out dividends. So, that happens a lot. Apple did that back in 2012 where they weren't paying out dividends and then they started paying out dividends. So here's a really cool thing. If we go back here, we'll go back to the Apple stock. So if we go to its max, so if we go to 2012, actually, let me just do 10 years. So if you bought it like right before they gave out dividends, let's say you were just buying Apple because you liked Apple, and they started paying out their dividend, check it out. Your yield on cost, if you hadn't bought any more past, what is that, June 2011, your yield on cost would be 7.69%. That is pretty crazy. Like, that is a really good dividend in just a 10-year span. So, is that going to continue for Apple? We have no idea. Obviously, the hope is that it's going to be there. History so far has proven that it has done very well. You can see its payout ratio is very, very low, by the way. So you are pretty safe there. Obviously, companies for the most part try to hit around a 60% goal as far as payout ratio. So with Apple doing 17%, there's so much room for growth in this company to be able to hit those goals and everything too. So if we go over back to this site here, let's go to values here. So this right over here, we're going to click on M1 again. And what we're going to do is do a calculator here. So this is going to allow us to kind of get some ideas of what we can expect in the long term. Actually, I got a better calculator. No, we'll use this one for now. So right over here, you're going to see the dividend growth rate, price appreciation, annual contributions, and then maximum dividend yield if we want to cap that. So for an example, right over here, this dividend growth rate with some of the companies we have, I'm going to leave this at 8%. We're saying on average, the companies that we have, they're going to increase their dividend by 8% every year. If we go to price appreciation, I don't know, let's just say if we want to be a little conservative, we're going to do 8% annual increases. Obviously, this can range for a lot of companies. Annual contributions, so let's say you want to do $1,000 a month, so that'll be $12,000 annually into this portfolio. Our goal is to do more than that. And then maximum dividend yield, we're going to do 12% as just an example here. So in the next 10 years, this is where we're going to be looking at right over here. So in just 10 years, and remember our goal is in 14 or 15. So in 10 years, right over here, you can see our annual income is going to be $6,078. So that is, obviously less than our goal that we would be wanting, because that would equal out to $500 every single month. But you can see our portfolio is going to be over $250,000 estimated. So if we actually bump this up to 15 years, let's see where this kind of takes us. So if we go to 15 years, all of a sudden our annual income comes out to over $18,245, which is actually well beyond $1,000 a month. And you can see here our portfolio value ideally should be over $500,000. So 10 years to get to $250,000, and then half of that time to get to double that amount, which is pretty insane to really think about. And this is with, in my opinion, a little bit of a conservative number as far as how much I'd be putting into this portfolio. The price increases for the overall stocks, and then obviously for the dividend growth rate, that's kind of maybe a little bit hopeful, maybe a little bit, expected for me, but overall it looks good. And here's the crazy thing. If we keep this up for another 5 years beyond the goal, we'd be getting an annual income of estimated $53,437 and almost $1 million into this portfolio. So let's go ahead and just kind of plug in a different number here really quick. And let's say we can double this up. Let's say we can do $24,000 in a year. So $2,000 a month. Let's see if we could do this, okay? So with this, and let's go 10 years really quick. So in 10 years, we would hit almost $10,000 a year annually in this income. And our portfolio would be worth almost $412,000. That is pretty cool. And if we try to get to our 15-year goal, so our 15-year goal, we would actually be making $30,000 a year, well beyond what our expectations are to try to get over $1,000 every single month, right? Because like I told you, $1,000 a month sounds great, but by the time I want that money and use that money, I'm going to need more, right? And you can see here, our portfolio value would be over $847,000. And here's the crazy part. Let's say we waited another 5 years to use any of that money, because we would be reinvesting all of this money so far back into it. We would be getting $91,000 in annual income in dividends, which would just be insane, almost making six figures just in dividends. And our portfolio estimated would be worth about almost $1.7 million. That's pretty insane for having a 1% dividend yield as of this recording, right? Like, when we're talking about having 4% yield, but maybe lower increases every single year, that would make a lot more sense why maybe it's a little bit of a slower growth. But if we're trying to get this at a max volume to try to get well over $1,000 a month, this is what we're gonna have to do. We're gonna have to try to put in a good amount every single year. We're gonna try to make sure we're with companies that are increasing their dividends or will potentially include dividends. Because here's the thing. So let's say like Tesla and Amazon and Google never give out a dividend by the time we want to hit this 15-year goal, right? Well, what I can do is hopefully by that time, these companies have increased the value of those stocks so significantly that I could sell those stocks and then just buy into a company that gives me 4% yield at that given time. And so that way I can have that dividend income coming in without the worries about the increases over the next couple of years, as well as the value of the stock. Because as long as I'm getting that 4% when I want it, it doesn't matter anymore at that point. So that's fine with me if they don't end up giving out dividends, but can we imagine in like 10, 15 years from now, if they start giving out a dividend, I can look back at these videos and be like, oh man, I wish I would have bought more. Like my dividend yield would be even crazier than it is today buying in right now. So just things to think about, and just kind of like the way I kind of perceive the idea of building up long-term dividends, because for me, I love dividends and I want to have them today, but I know that they're going to be more efficient for me in 15 years from now because I don't have to worry as much about the taxes and all that other stuff that comes with it. But if you want any of the resources we talked about here today, click the link in the show notes down below. It does help support out the channel and I really do appreciate that. But I actually want you to check out this next video right over here so you can keep on learning and growing with your investing. My name is Dennis and I'll see you in that next video.